Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. Founded it over 22 years ago, back in 2003, to provide the best technical analysis on the planet. Again, hope everyone is having a wonderful weekend. It is currently October 5th, 2025, on a Sunday. Again, if you're not a subscriber of Breakpoint Trades, you should really check us out. We put out 5 detailed newsletters per week, actionable trade ideas, from short term to long term, Matt's macro. We got some of the best mechanical trading systems you're going to find, an amazing community, etc. Okay, like I said, today, Sunday, October 5th, this is my comprehensive weekend review on all the markets. We do a very thorough technical analysis review of the stock markets, indexes, various sectors, commodities, cryptocurrencies, precious metals, gold and silver, our trading systems, Matt's macro vision, long-term swing trades, which has been pretty phenomenal. Good, great stuff. A lot to cover here. As you can see, this newsletter is divided into 9 major sections. And again, just first off, like a broken record, absolutely no changes on the uptrend on the US markets. Once again, the Dow Jones, got a typo here, it says down. Dow Jones up 1.1%. I'll fix that after this. Recording the S&P up 1.2% or 1.1% as well. The triple Qs, NASDAQ, Big Tech up 1.2%, and IWM, the small caps, up 1.9%. That said, again, trying to pick tops in this market has been a fool's game. We've had one of the strongest rallies in a long time since that April 7th lows, one of the biggest wall of worry rallies I've ever seen. And that has allowed our mechanical trading systems, such as our trend following swing systems, our KISS systems, to take advantage of that and be long this whole time pretty much. But that said, again, you got to be careful trying to pick tops in this market. And again, this bull market, it isn't going to end anytime soon. But from a wave counts perspective, we appear to be in this wave 5 of a 5-wave structure that we posted over a week ago. Well, a week and a half ago on the market pullback, we were viewing that as a wave 4, and that played out as we had another rally to new highs in the wave 5. But that said, because we're in wave 5 here, guys, I'm more cautious, and that's because of that. I'm going to put out some hedge ideas. SPXU, that's the triple inverse ETF for the S&P, some of these VIX ETFs. I also have a couple inverse ETFs for the precious metals. DUST, that's the 2-time inverse ETF for GDX, the gold miners. GLL, that's for the metal gold, the 2x inverse. And DOL, if you wanted some more leverage, that's the 3x inverse. Okay, so I do think it's time to put those out. We are in that 5th wave on the market, so we'll see where this goes. Does it pull back from here? Do we still go higher first? We'll see. Either way, you need some sort of trigger. Precious metals, like I said, that has been a fantastic bull market. I put out a bullish long-term buy back in February 2024, and that has played out big time. Gold at the time was around $2,100 when I made that call. It's now $3,900, or an 85% gain. Silver was around $24 at the time, February of last year. It's 48. That is a 100% gain, guys. So much easier to buy and hold stuff like that versus doing all these quick, in and outs. It's too easy to get all caught up in the wiggles, over trade. And so that's why I like Matt's macro, because it enables me to focus on that kind of stuff, let things really run. Because that's where you make the big money, guys, is catching these big trends versus, catching day trades that you're gaining 1 or 2% on, if you're lucky, or a few percent. Okay. As far as the precious metals, though, like I said, still in a fantastic uptrend. They're quite overbought. But I'm kind of wondering if these large round numbers are magnets. 4,000 on gold. It's only about $100 away. It seems like a possible target we need to tag before a top. And $50 on silver. That's also very close. Now, silver has hit $50 twice in its history. So it's not as big of a magnet, I'd say, as 4,000, but it's still pretty big. Gold's never hit. We're at all-time highs. So we'll see. Like I said, I put some inverse ETFs out for the metals and the mining stocks. And also, guys, last Friday we were supposed to have the jobs report. But with that government shutdown, we didn't get that. So we have some of these delayed economic reports. So we'll just have to see how long that shutdown lasts. The market ultimately, like I said, it's overbought. It needs a catalyst of some sort. If the government shutdown goes long enough, that could be a catalyst. If we do something where we take over things in Venezuela, maybe that's a thing. Who knows? It needs a catalyst of something. Matt's macro vision long-term swing trades have been fantastic, a great success. Happy a lot of you have caught those. Silver and gold in 2025. Platinum in April, it's up 65% for my call. SBSW, SPP, rare earth metal, lithium, United Healthcare, all these are, world markets from January of this year. All those are examples of Matt's macro long-term swing plays. Next, first image here. Here's the unemployment rate. Like I said, we did not get the jobs data on Friday because of the government shutdown. Okay, this last the month it was at 4.3%. Again, I've been stating this. I believe this will trickle up longer term, just because the unemployment rate kind of moves like a barge. Once it finally goes in a direction, it tends to go that way for years. So ultimately, I do believe that this will work higher over time. And maybe that'll be an excuse for the market to maybe not have such a pleasant 2026 would be my guess. Any pullback we get in the market, say early this fall, I think is going to be yet another buying opportunity. But over time, this sucker looks like it wants to move higher. Okay, next. Item number 3 shows the index sector table, what transpired last week. Again, you can see the gain for the major indexes up anywhere from 1% all the way up to 1.9% with the Russell leading. As far as the 21 market sectors here, kind of a 50-50 mix of up and down, though a little bit more sectors were up than down. Weakness here in the energy area, XLE, oil services, banks, financials, we want to keep an eye on those. Technology continues to be strong. Semiconductors, metals and mining, again, anything commodity related has been on fire. Remember, we're in a commodity super cycle. Biotech up 7.65%. Healthcare. Remember the administration's call on what they're doing with the pharmaceuticals, and drugs up 10%. Again, because of that. Now, guys, I have a little thing I gotta complain about YouTube. This channel is all about the technicals. It's about the charts. As you know, I do not get political here because I know how that is, how dividing that can be. That said, I know one of my videos got flagged from YouTube for political advertising because I mentioned the administration and a policy that they did. And it was just simply related to stocks like United Healthcare. You can't, I'm not even going to say the word because they will flag the video. And it is just completely unfair. This is not a political channel, as you know, if you've been following it. So YouTube, unfortunately, continues to have these problems. I hope they eventually fix that, but just what a mess. I mean, you can't even mention the administration when, they just did a big change on the healthcare stocks. It's one reason why I put Pfizer out last week as a Matt's macro play. That's why I put out United Healthcare a couple months ago. But you can't even mention the name beginning with a T, which is just unbelievable. All right, enough of that. Anyway, so you can see the sectors. As far as the currencies, US dollar continues to be weak, down 0.4%. Cryptocurrencies, Bitcoin, Ethereum, they rallied off those support areas. Big gains here, over 8% for both of them. Commodities, the general commodity index was down 1.75%, largely due to that crude oil. Crude oil and energy is a big weighting on that DBC index. So it was down about you can see crude oil is down 6.9%. So that's largely why this was due. I mean, natural gas is up 4.6%, copper up 6.6%. I'm not going to show those tonight, guys, just to keep the charts down. Now, again, what really rallied for the week again was precious metals. Once again, gold up another 3.14%. It hit 3,900 at one point, closed just shy of that. Silver up 4%, 47.97, $48. Isn't that crazy? Stone throw away from 50, gold a stone throw away from 40 or 4,000, a big round number. And GDX, the miners, they continue to rally. The miners, those fundamentals look a lot better with gold up at these prices, gold and silver. And the bond market, we did see a pullback in the 10-year, 30-year Treasury yields. Next, item number 4 shows the economic news calendar, which again, guys, we have the FOMC minutes this week. I didn't check to see if we're going to have that or not. Last week we didn't have the jobs data, so whatever. It's kind of day by day on this stuff. Okay, let's move to the index chart. So chart number 5, here's the weekly view of the 5 key major indexes. Again, everything was up last week, as you can see. All right, everything up. New changes. Again, we had that trade low on April 7th. We've had pretty much a V rally up. It's been just a wall of worry rally. And guys, here's another little interesting tidbit for you, just something to think about. Sometimes when trading, you get hampered if you know too much, if you're too smart. I'm not saying that come from a conceited way, but like even myself, I might be prone to look at, hey, the market's a little overbought here. I'm not going to buy this, or I'm going to take some profits. And I overthink it and things keep going up. Whereas I have subscribers at Breakpoint Trades who have just rallied, held the whole time. So, trading, you got to be careful with that, guys. If you overthink it, sometimes you could end up missing moves because you're worried about some event happening that doesn't. Anyway, that's a thing for another time, but let's move on. So starting with the big picture chart here. So here's a S&P 500 chart going back to the 1920s, just showing you the bigger picture chart. So longer term, the markets move in these secular bull and bear markets. So secular bear markets are these horizontal areas in the shaded yellowish orange area. They tend to last anywhere from 15 to almost 20 years. That's where the markets just have these big rallies and declines up and down, and literally go nowhere during the entire time. Just like here, the last big secular bear market from 2000, until 2010 or so. The previous one that you had 1968 to 1981. The Dow famously topped at 1,000 in 1968 and was 1,000 in 1981. So it was 16 years of like nowhere, but obviously big up and down movements. And of course, after the Great Depression, after the 1929 crash and decline, then you had this secular bear all those years until the late 40s. But anyway, the areas in green, those are your secular bull markets. We've been in a secular bull market. I mean, it depends on where you want to count it. If you want to count it when you finally break out of the range of the previous secular bear, or at the very low 2009. If you count it from the 2009 low, we're essentially 16 years into this. So we're still no changes. Previous secular bull markets, you could see, have been like 24, 25, 26 years. So if you go by that, this still has quite a few years left. Next, image number 7. Here's a monthly chart going back to the 90s. So again, same thing. You can see the bottom in the 2009. Easy way to look at this is an uptrend channel. So there's been no major changes. Big pullbacks in this channel have been, short-term secular or cyclical bear markets or corrections, right? So obviously no changes. It's like the pullback we had there in March, April this year was a buying opportunity. 2022 was a little bear market, but it was a bear market, cyclical bear market inside the secular bull trend. The 14 link stochastic up here is a great chart to add to a monthly chart. For those of you longer term, retired, you want to play golf all day, you don't ever want to do a trade really, or hardly ever. You want a paint dry system, let's call it. As long as the 14 stochastic stays above 50%, you're generally uptrending, and areas when it tests 50% tend to be buy opportunities. You could see it dipped a little below 50% there in 2022 during that bear market, but then came right back. Okay. Also, guys, interestingly, we had a little MACD divergence that was possible earlier in the year. That has now been blown away. Finally, image number 8. Here is the weekly view of the S&P. Again, this really shows this vertical rally. Look at this. You had a nice decline February, March of this year. March, April. And then it's just been a V up. So we're in this wave 5. We'll see where it ends. One projection is 69.48. But let's be honest. If you get all the way to 69.48, 50 points away from the big 7,000 round number, why wouldn't you just go up to the 7,000? The markets really like those round numbers. from what I observe. Just like when a stock, let's say the stock first time it gets up to say $96, $97, it almost always goes to tag $100. That's one of the old adages on Wall Street. Same thing here. Market likes these round numbers. So we'll see where this ends ultimately. And we're not too far away from it now. Maybe we'll tag it by the end of the year into your rally. Who knows? But quite crazy moves. Next, get into some of the systems here. So chart number 9, here's the weekly view of the S&P 500 KISS system. So we have the KISS systems. We have them running on weekly, daily, and intraday. So they are trend following systems. They go long, they set an initial stop. We call them smart trailing stops. They move the stops up over time. So this is the weekly version. Smart trailing stop for the S&P cash is now around 6,300. Again, weekly charts, it's going to give it plenty of room here, just like it did back here, you know. But otherwise, one reason I'm showing this chart is we have a DeMark 9 now. Doesn't mean we stop here, but we do have a DeMark 9, and those are paid attention to by institutions. Next, moving on to the daily KISS system. So here's the daily KISS high performance system mean reversion combo for the SPY ETF, S&P 500 1X ETF. I love this system. I love these daily systems. So first off, just an amazing system. So this system went long on April 9th. Okay, set a stop there. It's 476.50. It's still long. It's been long this entire time, riding this entire uptrend up. And its current stop is 645.12. So if the market were to dump here and hit that stop, well, it doesn't matter. It's going to make a heck of a profit from the entry back here. But within this entire KISS trend, it's had, you could see, 5 mean reversion winning trades where it took a trade, additional trade to the KISS, made money, got out, took a trade, made money, got out, etc. Just closed out a recent one here. So really love this combination because these mean reversion trades within the KISS, they have a stop exit, which is simply the STS that the KISS uses. Next, image number 11. So here's the S&P cash version. Looks a little bit different than SPY. SPY went long here on like April 9th. This one went long on April 24th. Really pretty much the same prices though. And you can see the winning mean reversion trade, just like we had a recent one here. And now the cash version here of the S&P closed out, went long, had a stop out, but then went right back long a couple days later. So it righted itself. And finally, chart number 12, here's the NASDAQ triple Q's high performance KISS system mean reversion combination. Love this system as well. Again, same entry back here. It's still long. Its current stop is 585.41. And you have this, you have 6 winning mean reversion trades. Now, I've been emailing this system out to our subscribers. So if you're not a subscriber, you're a subscriber, you should at least set up. I've been actually sending this out to our free list. So at very least, you want to sign up for our free email list so you can receive these trades. And I've sent out the entire trade history going back to 2003. So you can look at all the stats on these. Matt's macro vision. Okay, Matt's macro vision. It's been a very popular thing on the website. And again, I'm really glad that I added it this year because for many years I've put out these longer term ideas and they get lost in the shuffle in the newsletters. So, and a lot of you have really profited from it. So it's been a very popular section on the website and it's going to continue. Again, last week on Monday, I added Pfizer to the Matt's macro. Okay, so that's another reason to be a subscriber, guys. If you're just a YouTuber, you would not have seen this. So reason I added Pfizer, well, remember the change with the drug companies from the administration earlier in the week. Again, I don't want to say the name. YouTube will try to say we're political advertising, which is stupid. And anyway, but Matt's macro vision trades, they have a couple reasons. First off, they generally are a long-term weekly, monthly chart that's basing out or has some sort of trigger along with fundamentals. So the fundamentals would be, based on this sector being in a downtrend for the last 3 to 4 years. The fundamentals are good. Now they have administration on their side. But here on Pfizer, it's been downtrending since late 2021. what struck me was this very obvious 5-wave downtrend. Wave 1, 2, 3, 4, 5. Again, L8 wave can get very complicated, but you don't need to be complicated on here. You can see the 5-wave structure. I mean, you could be the most newbie noob and you would see this. So 5 waves, MACD divergence, RSI divergence. So whenever you have 5-wave divergence, I look for some sort of reversal, guys. Okay, because that's typically when you get that. So we have 5 waves divergence, and then you had the positive news with the pharmaceutical drug companies. And so I put this out as a MATS macro. And image number 15, here's the weekly view of Pfizer. So the other thing technically, first off, you can see the 5-wave structure down. You can see the load actually occurred in April. That was really the great time to buy it, but I wasn't looking at it then. And just recently we took out a resistance level here. So I'm long. I got to stop. I got to stop just below this higher low. Again, you got to determine where you're going to set a stop if you buy this. And some long-term targets over time, even just adding a fib from the recent highs to the lows. 38% fib would be up here around 32, 50% fib, 35.69, 61.8 fib up here just over 39 bucks. Those are very good percentage moves. Now, here's where things could get tricky. Remember my comment about knowing too much sometimes? You might be saying, oh, the market's maybe ready to enter a pullback. So does that mean that I wait on Pfizer? You have to determine that. That's where it gets tricky. My thing is you got a higher low here now. You could look at that, or if you do think this is going to pull back, you could wait, but that's your choice. But longer term, I think it'll appreciate higher over time. Next, just going over some of these other MATS macro plays. I'm not going to go over all of them, but again, really had some great call this year. Platinum, talked about this extensively in March and April, but it was really in April that I started pounding it. I put out a detailed YouTube video on it, going over Platinum. At the time, it had it's been essentially downtrending since 2008. We had a nice base here, it had a coil on the weekly and monthly. So it was really set up here. I put out all the fundamental reasons. This triggered in May, and essentially this is up 65% from that trigger. If you would have asked me back in May if I thought Platinum would be up 65% in 4 months, I wouldn't have guessed that. Maybe it would have been up 30%, but it just shows you what kind of market we're in. But fantastic move here. You can see it's retraced 61.8% of the move from the ultimate highs from 2008 to the 2020 lows. Fantastic. Congrats if you picked that puppy up. Next, chart 17, here's the weekly view. Now, this is the ETF, PPLT, which most of you probably bought. Now, we do have a 5-wave structure here, guys, so you got to be a bit cautious up here at this point. So, if you felt like locking in some gains, I mean, it's up 65%. If you bought it down here, even on this coil break, you have some hella gains here. If you want to lock some in, I think that's wise. Next, chart 18, here's lithium, global lithium ETF. I put this out in June 1st, essentially. Again, we all know this is needed for battery tech and everything else, rare earth. You had just a perfect, nice weekly downtrend line from the downtrending since late 2021. So this was your trigger point. To me, it looked very low risk. Buy it there, put a stop pretty tight below the trend line. And this puppy is up massively from that entry. If you brought it there, it's great. It's hit its first major target. Again, this move isn't done long term. I think it eventually goes much higher. Maybe it pulls back here soon. You can see how the moving average ribbon had flipped there as well. Next, chart 19, here's the daily chart of lithium. So your trigger point was essentially around here in June. Again, I talked about it in early June, but if you waited till around here, I mean, guys, essentially up almost 100%, or 90, 80% from this entry. Next, image number 20, here's Remax, the rare earth metals. I put this out in mid-June. This is the weekly chart. You can see why I liked it technically. Double MACD positive divergence, weekly demand zone. Your trigger point was here around 40 to 39, breaking this wedge. And this sucker has continued to move up. Essentially, we're in a wave 1 of a bull market. Massive move here, guys. Next target would be up here. We'll see if we go up to there. We pull back first. And this is where, again, this is where I say sometimes knowing too much can get you in trouble. I thought on the daily it was a little overbought here, but the best thing is to just have been stick with it. And chart 21, here's the daily chart just showing you, even if you bought this trend line break here in June, sucker's up 82%. So congrats if you've just stuck with this trend. You can see the pullbacks here have been symmetrical. You haven't had any break in trend or structure. And look at this volume, guys. Amazing. Next, chart 22, SBSW, another Matt's macro. This is actually from April, along with platinum. It's kind of platinum, palladium, rhodium. It's kind of a whole rare earth ETF. You can see the beautiful weekly chart. That's why I liked it. And of course, all along with the fundamentals. Sucker's up about 173% from those recent highs. Next, chart 23, United Healthcare. This was another one. Again, we know about Buffett and Jim Simmons, whatever. United Healthcare was declining for the last few years. Got washed out in August. To me, I added it back here on Matt's macro around just around the $300 range, and it's had a nice move percentage-wise. And one of the first targets is filling this gap, which it's almost done. By the way, most of these or all of these Matt's macro plays are in our KISS systems, guys. So just showing that real quickly. So go to Matt's macro here. You can see Matt's macro we have on the daily. You can see all these nice gains here. The ones in blue here, we had new smart trailing stops. We also have weekly versions of these puppies. And for longer term, here's a Matt's macro vision on the weekly. So we also have a lot of them in the high performance area as well. I'm not covering gold here and some of the world markets. I'll be covering that below when we get to those sections. But let's go ahead and move on back to the major indexes. All right, sorry about that. So chart 24, here's the S&P 500 daily. So again, a couple weeks ago, I drew this parallel channel lines. You can see we continue to just tag the upper channel line here. A couple dojis the last couple days. So again, do we break up through here, power up, or do we finally start to roll over here? We'll see. But again, we're still over the 9 EMA. Like I said, guys, nothing's changed, but doesn't mean you can't be a little cautious up here. Another thing to watch is the 60 period stochastic. I think I pioneered that about 15 years ago. And one thing I noted, whenever it trends above 80%, you're in a momentum condition. You can see every pullback has found support around 80. But when that finally starts to break that 80, that'll be important as well. Next, image number 25. Here's the half-day chart. Again, just keeping it simple, guys. What do we have here? We have essentially 8 higher lows in place from that April 7th lows. Higher low, higher low, higher low, higher low, higher low. Broken record. Last one's around here, just over 65.50. So, there's some divergence here, etc. But until we break a higher low, break a structure, there's no changes in the trend. Next, chart 26. Here's the 60-minute chart. Remember early on in the newsletter, I said we have 5 waves up. So that last pullback in late September, we counted that as a wave 4, and that played out. So we've had a new rally to wave 5. But whenever I start seeing 5 waves, I start getting a little nervous because that's when you can start getting reversals soon. So now we'll see. We're going to keep an eye on that. This would have a wave 5 here. And the next image number 27. So under this count, again, that's the issue with wave counts. There's always multiple variations. This count would have it as a wave 5 of 3, and then you have a big wave 4 pullback. It doesn't matter though, guys, because you still have 5 waves up. So eventually, under either case, you would still get a pullback soon. And image number 28. So here's my example of 5 waves. This is an idealized 5-wave pattern, 5-wave structure to the upside. Notice after your 5 waves, you get some sort of pullback, A, B, C, or whatever, or a major trend reversal, or 5 waves down. Then you get a reversal. So the point is, whenever I see 5 clean waves, either up or down, I start to change tactics, set tight stops up, look for some sort of reversal. And we do have 5 waves up. Finally, chart 29, here's a 10-minute chart. You can see the pullback late on Friday. We'll see a little support area here. This kind of looks weak. We'll see how the futures open here tonight, of course. Earlier in the week, we were looking for a nice rally up, and we did rally off that this big consolidation here, which we favored. You can see on Monday I commented about that. Next, chart 30, here's the 4 time frames with our custom indicators on the S&P. Again, that last pullback in late September was a fourth wave. We bounced right off that daily ATR. We have a little end of bear cycle here, bull cycle, I mean, on the half day. So we'll see if that plays out or not. ATR otherwise is support on all the time frames below. So we'll see how those hold on a pullback. And just because we're in this structure, here's a couple of hedges. Here's SPXU. This is the, again, triple inverse ETF for the S&P. On the daily, you could see this lower trend line. We're back at it. So it's a low risk area to take a hedge with a tight stop potentially. And chart 32, here's a 60-minute view. On the 60-minute time frame, you could see a wedge-like look to it. And one more chart, chart 33. Here's a 15-minute chart of the S&P. So notice so far, and this breaks down the wave count quite a bit more. Now this, again, you either have a wave 5 up here or not, or you can make another move to high. So far, we have a symmetry. We haven't broken symmetry really, or not much. 45 points here, 44.6. Is that enough of a break? I don't know. Again, we'll just have to see where futures open here in a few hours. Next, chart 34, moving to the NASDAQ, triple Qs. Again, new high last week. We are setting up some RSI divergence here. We did bounce off the last demand zone. Let's see what happens this week. Next, chart 35, here's the half-day chart, or 60-minute chart. Again, just like on the S&P, you have a 5 waves up here. Next, chart 36, here's the 4 time frames. Again, we're still holding the ATR on all the time frames. It's like on the S&P. So we'll see how things look coming into the week. Finally, chart 37, IWM small caps. They rallied off the demand zone here. Moved up, made a new high last week. They outperformed last week. And finally, chart 38, here's the 2-hour view. They made a minor new high here. There is an open gap here. What I'm watching here is this channel. We'll see if that holds. Okay, so that does it for those indexes. Let's move on. Chart 39, here's the VIX. Not much to say about the, well, there's a lot to say about the VIX here, guys. The VIX, as you can see, it's been not doing much. It's been basing here, but the basing is what worries me. That could lead to a pop, right? But the other thing is this correlation indicator to the S&P. Normally the VIX moves opposite to the S&P, but lately we've been seeing the VIX and the S&P go up on the same time on a lot of days. And so look what the uncorrelation indicators have been doing. It's been spending a lot of time below zero. You could see in the past you get these uncorrelation spikes, and that's why I'd call them spikes, because they go below zero for a day or so and then pop right back. But it's been sustaining below here, so we've really seen the VIX start become uncorrelated to the S&P, and that's when you can get near some, say, inflection points. Chart 40, here's the 60-minute view of the VIX, kind of coiling here, so monitoring this. And chart 41, here's the VVIX to VIX ratio. Quite interestingly, this closed below its lower Bollinger Bands last Thursday. Normally, that only happens on a pullback. This is usually a pretty good system to go long or short. But I think the reason it did this is because what we're seeing with the VIX being kind of uncorrelated with the market. So let's take a look at those charts more in depth. Chart 42, here's the S&P up here versus the inverse VIX. And you can see how uncorrelated they have been for the last month and a half. Look at this. So definitely some interesting thing there. And chart 43, here's an overlay chart of the S&P to the inverse VIX. And you can, again, look how they just traded on top of each other. And then you can see this divergence that started to occur. So usually you start seeing that stuff before some sort of market inflection. So that's what also has me a little bit on nerve. Next, moving on to the bonds, chart 44, high yield corporate, still in the channel here. Remember this leading indicator, hasn't broken any supports. Also notice your 60 stochastic just been embedded above 80 the whole time. But we'll keep an eye on this puppy because it leads. Next, chart 45, the 10-year treasury yield. Previous week stalled at the downtrend line, but trying to form a higher low here. See what it does this week. And chart 46, here's the big picture of the 10-year treasury yields and bonds. So again, like I said, interest rates bottomed in 2020 from that big long, 30 39-year secular bear market, and we have been in a secular bull market for interest rates. This is also kind of the new, you could count it as a secular bull market for commodities or inflation, just like we had there in the 70s. You see how the 10-year uptrended all during the 70s, during the commodity super cycle and inflationary cycle. We're basically in the same thing. Okay. The only positive I'll say is these inflationary cycles don't seem to last as long as these downtrends in the rates. But you don't have a lot of data points, quite honestly. If rates were to come down eventually more, I could see them bottom around in the 3.5% range here. But I think that would be the bottom, guys, because longer term, this will likely go higher. Now, looking at these market sectors, we'll just go over some of these. So last week, again, remember on Matt's macro, he talked about the healthcare area. And that's why I added Pfizer to Matt's macro. But the healthcare with the administration and the drugs, that had a big pop out. And you can see it's been a great trade, swing trade, even just this ETF here. You had a nice clean resistance at 139.50. Nice breakout. Next, chart 48, Eli Lilly was one we put out. Steve put this out. Was a nice trigger for the downtrend line here. Popped nicely. There's a little open gap up here that could be the next target. Again, Pfizer was the one I added for Matt's macro, which I already discussed above. Next, chart 49, XLK Technology continues to work higher. No changes here. Big cap tech has been leading. Next, chart 50, semiconductors. They continue to make new highs here, so still very strong. That said, the Magnificent Seven, the big cap tech stocks, this ETF relates them. You have a potential little double top here. So remember, these dominate the market. So if they start to correct, that would pull the market down with it. Some of the weak ones I've looked at are Meta. I mean, take a look at Meta here, guys. Well below its 50-day moving average now. Looks ugly. Got a lower high here. And Amazon looks quite ugly below the 50-day, kind of bear flaggish look. Now Google and Microsoft, they're fine. But, these do not look too pretty, as you can see. Next, chart 54, biotech's been just powering out of here. This typically moves with small caps. It's outperforming. You can see that flag back there. And, of course, the drug sector from last week. So that helps this area. Chart 55, here's biotech on the weekly. You can see it's coming up to a level up into this area. Next, chart 56, banks. They've been weakening here. You can see that divergence on the MACD from the recent high. Still above the 50-day, but weakening here. Chart 57, financials. They're still holding the 50-day, but, they're losing a little momentum here. Chart 58, industrials, but this coil pattern, it hasn't really had a good break out of the coil. Caterpillar did, which I put out a while back, but this is still kind of muted, but it's still strong. Chart 59, utilities have had a nice power move here. It held the demand zone back here in early September, then broke the downtrend line, and it's been off to the races. And chart 60, real estate continues to look pretty decent here. Kind of a long ascending triangle look to it. Resistance is up here at 98. Chart 61, energy. Energy on that pop stalled at resistance. Supply still hanging on to some of the major moving averages, though. The world markets have outperformed this year. I called this back on January 30th. So EEM to SPY ratio. You can see our markets have been outperforming world markets for the last 15 years or so, but you can see this buy trigger back here from months ago. They have outperformed. ACWI, another world market ETF. This is more of the developed world markets and some emerging markets. This has outperformed too. I'm watching this 50 trigger. China's outperformed our markets this year as well. And moving on to commodities, chart 64, DBC down 1.75%. Again, still in this channel it's been in for the last several years. Largely DBC is moves with crude oil, which has been quite weak here. I'm not showing natural gas and copper today. Jabber 66 or DBA. So Jabber 66, platinum. Again, part of Matt's macro, platinum. Massive move this year from that breakout in May. Again, it's up 62%. Just continues to make new highs. Your second opportunity to buy it was this coil pattern back in August and September. We have a little slight RSI divergence here for now, but the trend has been up. Jabber 67, SPPP, that's the ETF to own both platinum and palladium. This has been another great mover off this long-term base. If you bought this in April or May, it's a way to own both of them. Palladium has been kind of the laggard here, but I think longer term it's going to start working out as well. Jabber 68, SPP on the daily. Look at that volume, man. All right, moving on to crypto. Jabber 69, Bitcoin rallied off that demand zone, support zone from September. Slight new highs recently. Nice move. Next, Jabber 70, Ethereum. Remember I said watch for that broken trend line on the weekly to hold the support, and that's what it did. Still looks decent here, like a flag. By the way, Ethereum is one of Matt's macro plays as well. Jabber 71, here's the daily chart of Ethereum. We've been looking at this as a wave 4 possibility. So we did get a bounce there, but still ways to make a new high for a 5. And Jabber 72, US dollar weekly view down 0.5%. Honestly, it's been holding this demand zone here for several months, as you can see. Obviously, big sell-off from the supply zone. Jabber 73, here's the monthly view. You can see this is basically, this area is important because it's a big trend line on the monthly going back to 2011. So it's important support. And Jabber 74, here's the daily chart. So again, it's trying to just hang around here. We'll see what it does. Can it form a base and bust out, or is it going to eventually bust hard lower? We'll see. Next, moving to precious metals, which have been all the rage. Gold hit a high of 3,900 here. Amazing coil here. That was an easy buy. Again, are we close enough now just to hit the 4,000 round number? Maybe. That said, we are getting toppy. Here's GLL. That's the 2x inverse ETF. You can see a wedge-like pattern, something to watch if you're looking for a pullback in the metals, or if you have a bunch of metals but you don't want to sell them. A good hedge. And Jabber 77, Dole. I like some of the names of these ETFs. So it's the triple inverse ETF. You can see the wedge pattern here. And Jabber 78, gold on the weekly, up another 3%, guys. Unbelievable. So we're in this wave 5 or wave 5 here. It's a parabolic move, just been crazy. Again, I picked it. There's a swing trade back here in February 2020 as it was breaking out of this weekly base. Jabber 79, gold on the monthly. Again, we're in this major wave 3. Eventually, when we do get a correction, maybe we could pull down to one of these demand zones or something. That would be a good long wave 4 buying opportunity. Jabber 80, silver, just up and away. You can see it's going parabolic, very close to the 50 area. Jabber 81, silver on the big picture. Again, what you have here is essentially a 45-year ascending triangle. The conservative measurement, if you measured it from here, would be $35 to the high. So you'd roughly measure to $85 on an eventual breakout. So it's pretty crazy, guys. Silver's hit $50 twice in history. Once from the Hunt brothers tried to corner it, once in 2011. This we're going to obviously tag it. Do we pull back or do we bust it? But eventually we're going to take that out. Next, the mining stocks, Jabber 82, GDX. Again, just up and away. So one thing I'm watching here for an eventual pullback is this ratio. I want to see the ratio break. That's the GDX GLD ratio. Notice your moving average or your MACD. So the stocks tend to lead. So we may see the stocks top out before the metal. So we're going to watch this. Now, what I want to watch is this 2-hour time frame on GDX. You got a very well-defined channel. No changes here, but what I'm going to watch is this ratio on the GDX GLD ratio. Watch the trend line, watch the channel. No change in the trend yet. But once I do get a trigger, I'm going to be looking at dust. That's the 2x inverse ETF. You can see the channel here. A good clean break of the channel would be a trigger point. All right, guys, almost done here, I promise. Chart 85 KURL was a long idea last week. Battery tech. What I liked about it was the long-term trend line. This was given to us by one of our subscribers, so it was a great trade. But just take a look at how similar this looks to the lithium, Matt's macro. So here's Matt's macro, lithium. Notice you got the same freaking trend line. Again, totally not really related. This is a weekly chart. This trend line goes back to 2021. KURL above, goes back only about a year. So, but just amazing how they were very similar trend lines. Some others, chart 87, Oscar. It's been kind of a swing trade for a while. Broke out again last week. Chart 88, QS. Quantum play. Remember I said back in July, August, I said this would be a good buy at the demand zone. Hopefully some of you bought it there. That was a hell of a buy, and then recently got a coil flag and it broke out of there. Next chart 89, CLF. Kind of been on the list here. Been working out. Chart 90, J&J, Johnson & Johnson. We had it as a long back here in July out of this ascending triangle, and then recently again in this flag. Chart 91, BABA. It's been a beautiful play. The swing China market's been very strong. Chart 92, Intel, same deal, big breakout. Government, let's call it government semiconductors with their investment into this, as well as NVIDIA recently. Chart 93, mRNA, Moderna. You can kind of count this with the pharmaceuticals. Nice base here. Chart 94, DNA. Nice rally off that 200-day moving average. That was the easy place to buy, guys. That retest there. Chart 95, Visa. Trying to break out of this little pattern, but so far just a small break. And chart 96, here's UVIX. That's the inverse 2x VIX ETF. So if you think the VIX is going to pop soon, that's an ETF you could trade. All right, guys. Quite a long newsletter, about 50 minutes, but we covered a lot of things. Again, hope all of you have a nice weekend. On the YouTube video, please hit the like button, the thumbs up, make a comment, share it. Helps the channel out. So really appreciate it, guys. Appreciate all the support over the years. And if you're not a subscriber, that's probably the most help if you actually try our service out. Anyway, have a wonderful rest of your Sunday. Take care.